All good things must come to an end, like the rally in mega cap tech. But on the other hand, it's a new beginning for small caps, really outpacing the market yesterday. The question is will it continue? Well, bad earnings start yesterday. Banks not helping much. So Q2 not looking great so far. We'll break things down with Jonathon Corpina from Meridian Equity Partners at 8:35. It's a Friday on pre-market prep with PPI at 8:30.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders and investors. We're steady Eddie here in the S&Ps, up 2.25 at 56.42. I got to say, though, I got to go to the IWM immediately and say up 1.23% at 213.27. The buck a little bit red here, leading on the low from yesterday, down 13 cents at 104. TLT down slightly, 93.39. Crude up again, going back towards that 84 level, up 80 cents, 83.41. Gold taking a breather from that rally yesterday, down 15.40 at 24.0660. Silver, woohoo, under 31, down 70 cents at 30.97. And Bitcoin muddling in the 57K handle, giving back the gains from yesterday, down $100 at 57,480. Let's bring in the master of arbitrage disaster, Triple D. Let's bring in AB and Dennis. What a turn in the markets yesterday, and
Yeah.
will it continue? I guess is the main question. It is continuing this morning.
I mean, PPI is going to dictate some of this here. 8:30 obviously could see, some significant movement in the IWM again. If we get a light number there again, it would be like, oh, this is for real. If we get a hot number, then it's going to be mixed signals. So again, you're going to see some response. PPI not as important as obviously CPI data, but still important. And obviously IWM investors are going to be watching that number very closely.
Okay, AB on a Friday. How you doing, AB?
I am good. Joel and Dennis, how are we doing this morning? And yeah, I mean, yesterday's price action was just wild. A lot of people, for a while, have been calling for a pullback in mega cap tech stocks. Finally got that yesterday. You saw some bears on Twitter coming out of the woodwork saying, "See, I was right. I was right." Well,
yeah, I know.
You're right for one day. Congrats.
Right for one day for sure.
And we're the big boys selling the big names to get into the small names. Maybe, I don't know. I think we'll have to wait and see, I guess. But definitely IWM perking up yesterday on hopes that the Fed will for sure cut interest rates at least once, maybe twice this year. Or the CME's Fed Watch tool now showing a more than a 90% chance, basically a 95% chance that we will have a rate cut in September. So obviously, we know that's better news for small caps. Should be good news for everyone, but the big names have been a flight to safety with higher interest rates, and maybe that story is starting to change here a little bit.
I think so. It's been just an incredible run. And, I went on a tweet storm there after the open. And if you don't follow me on Twitter, please do, because things change, dramatically. We kind of could feel it even in the pre-market that this was going to be a rotation day. It wasn't going to be a day that they were buying everything, because about 15 minutes after, you mentioned quickly, Joel, the futures went red. And I was quick to mention, but the IWM is sitting at the highs. So we're not seeing everything sell off. We were simply seeing very early rotation into the laggards from the leaders. So it wasn't even a day where it was just mega cap tech selling off. It was a leaders to laggards, to leaders day. Costco, case in point, was way up. membership fees. The stock was up $25 at one time in the free market there, actually $40 after hours, which was just ridiculous. Started to leak on the 8:30 number. The leak never stopped, and it was down significantly. Like, what's wrong, Costco? They didn't like them raising memberships. You know what was really wrong? It was leaders to laggards day. And those leaders, when Costco, who's been a bigger leader than Costco? Costco leadership, they hammered all those stocks yesterday. And the stocks that have been lagging, China, for instance, obviously the IWM, which we've talked about, had a huge day. But so many other stocks, from the Cathy stocks, a lot of technology stocks were up. The small technology was doing well. So it was totally leaders to laggards, laggards to leaders. We'll see if it continues. If the PPI comes in light, it may continue today. If it comes in hot, maybe they go right back into the safety trade of mega cap tech. But it's going to be an interesting day. 8:30 is going to be a big number.
One leader also that continued to do well. Well, we mentioned Lilly in the pre-market show, that Lilly was able to hang in there, and then not mega cap tech, but Berkshire continued to do well yesterday, which has been obviously just a monster, but Warren continuing. Warren does well, it seems like, in any environment. And yes, Dennis, we did have another mic cut out. I'm seeing.
I'm gonna have to try a new headset because my internet is fine. Like you said, my picture, I believe my video isn't cutting out, so that's why I don't think it's the internet. It's something to do
we're
with
on it. We're on it, guys. But we do have an astute chat that is,
this weekend. I'll try a new headset. I'll go buy a new one. We'll try that. See if that works.
Spend more than $19.99.
But you go on those heavy ones, and I went and bought an expensive one, and it didn't work with the darn either. And I don't like it when this is foam. I don't like it when it's not foam because my ears get, I don't like that all surrounded. Like you got that plastic on there. I hate that plastic around my ears. So, but yeah. So anyways, Video is fine. So it's obviously, not the internet. It's probably this mic issue. So I will, and I'm not surprised. My kids pull on and bug me all the time. So it's probably a problem. So we'll blame the kids for it. We'll get it fixed. Oh, he said video stuttered too.
Uh-oh.
I mean,
there we
the
go.
video stuttering too, then it's an issue. I've not seen the video, and you guys aren't breaking up on my end. So that's why I tend to think it's my mic. Maybe I'm wrong.
All right, well, let's talk about some of the specific names. I mean, when we're looking at big tech from yesterday, some names fared better than others. I think your biggest loser of the day was Tesla, and you had a few different headlines there. Dennis, I know we've talked at length about the company's robo-taxi plans and what it will mean for the business. You did have a headline that the company is delaying the robo-taxi, business by a couple months here. And if you've been following Tesla for a while, it shouldn't come as a surprise because we know that Elon Musk has this tendency to, put very aggressive date targets out there. And then a lot of times those don't end up panning out. But it's one of those things that I feel like, because it happens so often, that you get almost people, it's like more forgiven because people just understand, well, yeah, Elon Musk is going to throw some dates out there and then it's not going to necessarily live up to it. But eventually, they will hopefully deliver on these promises. But you had that on a day where big tech was struggling overall. And then the stock also got a downgrade. So you had this whole confluence of different bearish headlines on Tesla yesterday that ultimately led to the stock closing down nearly 9% after an 11-day winning streak. So I don't think this really changes anything for the long-term bull story on Tesla. We've talked about the energy storage side of the business, but the stock probably was due for a pullback, especially considering in its current state, the car business still its main and basically only revenue driver has been struggling. So I think short-term pullback, if you're bullish Tesla because of all these other reasons, those other reasons are still in play. Just again, the short-term volatility here on Tesla.
The headline was bad. I mean, that's not, there was a lot of hype going in. We were coming into a run up, 2.5, or, I guess we were still a month away from the robotaxi event, but the headline was bad. And I'm not surprised at all that got hit on this. One thing, though, to your point, is Elon Musk never hits timelines. He eventually comes through, but he never hits timelines. And I'm going to say it here. I said it on the closing print there last night on PreMarketPrep.com, but I'm going to say it here again. I don't think he hits October either. I don't think we're going to have robo taxis going. Maybe they have the event, but they're not going to be ready to like ride in October. It's going to be difficult to get those cars perfect. And really, when you're doing a driverless car, it's got to be perfect. It can't be 99%. It can't be 99.5. It's got to be 99.99999%, where it's having an accident once every like 300,000 miles or something significant to get at least along the line of a human driver. So it's going to be difficult to get there. Does that mean he's not going to get there? I think he does. The reason, and I'm kind of repeating to what I said last night, but I don't think there's as many people watching the closing print as there is this pre-market prep. So I just want to repeat some of my arguments. The reason I'm long the stock is I believe that they will get there. I don't know the timeline. I don't own calls, because that's a time thing. But I have, I'm not on margin. It's approximately 5% of my long-term portfolio, although it's a little bit less after yesterday. But I think he eventually gets there. I talked about the rockets with SpaceX and then the failures. He's had lots of failures. When you take on projects like this, there's going to be failures along the way. But it's like he doesn't give up, and I believe in Musk, and I believe that they're going to figure out FSD, and I believe it's going to change the world. Waymo, they're doing their thing, a little bit different technology, geofenced in the main cities there. They have, driver assisted driving because there is, drivers watching these cars and helping them along and helping the cars. Musk trying to do it like full on, the cars do everything. So it's going to be a little difficult to get there. There's going to be some bumps in the road. I'm in Tesla for the long haul, though. I'm not in it for a trade. I didn't sell any shares yesterday. I didn't enter it at 150, 160, 180 and 190 for trades. I entered it because I believe that eventually Tesla's going to get there, and I've got a 5 to 10 year time horizon on these shares.
Okay, Dennis,
so if you're in it for a trade,
yep.
Am I breaking up? If you're in it for a trade,
No.
you maybe want to sell it. You maybe want to just take the 30% and run, because you're up. You're still up 30% from what we've been talking about for the last 3 months. So maybe you take it and run if you're in it for a trade. I'm not in it for a trade. I'm in it that I think this stock is going to solve FSD, and Robotaxi is going to be out there. Humanoids are coming in probably 3 to 5 years. I think this could be one of the most valuable companies in the world in 5 years. 5 days?
Not 5 months.
Not 5 hours, not 5 days,
Okay.
not 5 months, 5 years. I think in 5 years, it's one of the most
Dan
valuable
Ives
companies.
over at Wedbush agrees with you, right? Mm-hmm. He raised the price target from 215 to 300. I believe there was a downgrade to sell from UBS, but I'm just gonna take off like the long-term blinders, right? The 1 and 2 or 3 or 5 year projections, because that's your investment thesis, and that's the investment thesis by many. But what I'm just going to look at is, what you look at, Dennis, and it's the news flow and the turn. And they had, the good news on the deliveries. They had the energy storage. The news flow was excellent, right? And there was a very ripping market. Tech was in favor. I feel that the news flow has turned here a little bit. It's turned into price action, and it's turned into it's turned into candle, and of course the analysts come in. So I think if you're waiting to buy this I think that you're in a very dangerous zone here between 200 and 240. So you don't know if it's going to come all the way back to 200 and fill some of those gaps there, but just from a short-term perspective, after an 11-day run up, great news flow. You have a double negative news flow. You don't know if analysts are going to come out and downgrade it more. So I'm not disputing your long-term thesis, but what I'm saying in the short term, you got to be prepared for prices as low in the lower 200s. And then you want that because you want to buy more.
I do want to buy more, and I'm kind of excited to think about it back at 180 to 200 because I probably didn't buy enough. It got up to almost 5% of my long-term portfolio with the run. I probably started at around 4 or 3.5, but the stock went up really fast. I didn't anticipate going up that quickly.
Yeah, I know.
So yeah, I mean, you've got to have the reason for buying, and you've got to know your time frames coming in. And again, if you're in it for a trade, I'd probably sell it this morning. If I was in this for a trade, because I think that there's going to be continued talk of, the delays. Musk can't hit timelines. The bears were prancing around and dancing and just going crazy. Red flags. People are saying in the chat. I mean, he never hits timelines, so I'm not surprised. I'd be surprised if he hits October. I'd be very surprised. We haven't even heard from Musk. This Bloomberg piece. Musk has said nothing. He's not commented at all on any of this. So it's interesting, that he didn't comment on it at all, but on Twitter or nothing. He had like 20 tweets last night. None of them were about this. So he hasn't commented. It's a Bloomberg piece. It is what it is. He, I think in the long run, proves that he can hit targets. It's that he just doesn't hit his timelines. And I think that's going to be the issue here. And that could be an issue for a while for Tesla.
Joel, are you doing close and print today?
No, I'm not.
I see. Well, you mentioned Dennis's, blind Tesla blinders, but 30 is talking about a different type of blinders. He wants some Saratoga picks. I didn't realize Saratoga was running already. We got to get up there. I've been wanting to go to Saratoga for a while.
I know.
Everyone here is going to upstate Michigan. We should go to upstate New York instead. They've got some good golf up there. We can go to the racetrack. I mean, that's on my bucket list.
Christian Farmhertz has a place up there, so
all right. Next time he's on, we'll strong arm him and twist his elbow and say, hey, we got to come and stay up at your place up in Saratoga, and we'll make some.
Okay. Yeah, that is right. That is opening.
All
okay.
Right. Well, let's move on from Tesla. We did have the start of a new earnings season this morning. Of course, the big banks always get us started there. Let's start with the biggest and the baddest of them all. Wow. Let's start with JP Morgan.
Oh, wow.
Pretty flat this morning. Came back after a dip after the earnings. JP Morgan reported an EPS of $4.40, beat the $4.19 estimate. Managed revenue $50.99 billion. I mean, this company is just massive. The revenue did beat by about $4.5 billion. They said investment banking revenue up 46%. So you are seeing mergers and acquisitions back. And then, it looks like a little bit of higher costs, though, for the company weighing on the earnings a little bit. So, again, relatively flat. You did have a dip down to about 204 right after the earnings. Now coming back here to 207. So some volatility in the bank stocks, but JP Morgan, again, when it's all said and done, pretty flat after the report.
Banks have been, one thing to consider is the laggards, leaders to laggards. Banks have kind of been leaders. They, everybody thinks of them as IWM and value trades, and they're definitely value trades, but they've been doing pretty well. So it wouldn't be surprising if they actually pause, because we're not into the leaders right now. We're totally into the laggards. That at least started yesterday. Maybe that changed with the 830 number, but just keep that in mind. Good news is JP Morgan has already bounced from the lows. So it ripped on the number, sold off, and has bounced back from the low. So it's kind of all over the place this morning. And obviously we had Citigroup numbers and we've had Wells Fargo numbers, and they're mixed. Wells Fargo's down, Citi's up. We can get to those charts in a second. JP Morgan has been the leader forever. One thing again to consider, it's not a cheap stock on bank metrics. It's trading 2 times book, which is probably as expensive as any bank ever gets. If we go to the other metrics like P, and that's one of the more expensive ones, but not crazy by any means. JP Morgan, I just grab its PE from the trusty Benzinga Pro. It's like 12 and a half. So it's in there. Yeah, it's in there. It's not crazy. It's there. Citigroup's 11, just for comparison purposes. Wells Fargo, we'll just go grab that one too because they reported it's 11. They're all kind of there, but the 2 times buck is one thing to think about. But I don't think you're gonna see JP Morgan rip up 10, 15, 20 bucks on this. I don't think you're gonna see it sell off. These stocks are more stable usually. It's been doing really well, and JP Morgan has always been best of breed.
It's a traditional dip and rip or rip and dip. It's always been a wild stock off its print.
Always.
Go to 211.77. Holy mackerel. That I'm not even going to consider that a level today, because I'm going to look at the pair of highs at the 210 area. The regular session all-time high is 210.38. You had it buffered by a 209.76 area. But while the resistance is a little bit more spotty, man, if you're a bull like myself and this picking this up in April of 2023, I'd really like to see it hold 205.5. Now, I know it took it out in the pre-market, but you got a triple bottom there. You went through it. You're back above it now. Love to see it continue to build the base at this 205 area, and then, on a more healthy day, get above 210. Yes, you mentioned it's a leader laggard stock, so it's not, not in that true laggard category, but it is a value stock, right? and we know what value stocks did yesterday. So, a couple different things, but I'm really keep an eye. If you're a long-term investor like myself, I'll be hawking this 205 area and sure like to see a sustained bid above 210 over the next couple weeks.
All right, Wells Fargo. Wells Fargo
Woo-hoo!
came in EPS $1.33, beat by 5 cents. Revenue of $20.69 billion, beat by about $460 million. The headlines that I saw were saying that their cost-cutting measures have stalled, and that some higher costs are weighing down the earnings a little bit. So even though you did have a slight double beat there, they did not upgrade or update guidance at all and move that higher. So I think it was viewed at by some investors as a slight disappointment here. Stock trading down about $3.50, 5.5% here this morning. So Wells Fargo, not the worst report in the world, but also again, maybe definitely did not exceed expectations. So you are seeing a little bit of a sell-off in Wells Fargo stock here this morning.
Sold off substantially.
Yeah.
I think there's buyers beneath for these banks here somewhere. We'll let Joel figure out that level here. It's hard to give you technical analysis on a stock 9 minutes ahead of a big economic number because everything is going to change. So, I mean, it's going to change for all the banks. Obviously, they're interest rate sensitive as well, even though they're not as interest rate sensitive as the regionals. The majors still are as well. So we'll let Joel do some technicals, throw him under the bus. But a lot's going to change in 8 minutes. And yes, I realize these glitches. I need to restart my computer. I'm going to try to do that later on in the show if I get a chance.
Yeah, so go ahead.
Throw out the high, throw out the low. That got to 60. I don't think we're going to see that. Closer to the pre-market low at 55.60, but man, like Dennis said, this is kind of tough. Right now, I'm just really going to go short-term support here. It looks like you have a buyer at the 56.50 area. In the bottom of yesterday's range, that will be good resistance at 59.28. And you don't know what the economic numbers are going to be, but like I see this stock and I see the price action, and I know they're totally unrelated, but just like my spidey sense, I don't want to get Delta in this one and sell it in the hole. So, there you go. Delta, look at that big green candle from yesterday in, different market conditions. So be more of a natural buyer here if it got near the pre-market low. But don't think we're going to be seeing that unless we get like a disaster of a number here in the PPI, which, usually follows the CPI pretty closely.
All right, should we move on from the big banks and get to some
Citigroup's up.
Oh, Citigroup.
Yeah.
They report at the top of the hour.
Yeah.
Citigroup came in, let's see, EPS at $1.52, beat by 11 cents, revenue of $20.1 billion in line. I can't tell. The call might be going on right now. Either way, the numbers were good enough to send the stock up a couple bucks here, $2, trading up 3% here for Citigroup.
Well, bucking the trend here, a big move on 600,000 shares. I would just mark wherever that like pre-market high is, like wherever that comes in and use that as potential resistance. Just the fact this is probably bigger than its average daily range. So I don't know. Probably won't open up at over 68, but see where that pre-market high is and use that as potential resistance. That's the best I can give you on Citigroup, bucking the trend. And one more one we can throw in here. Yeah, the nuts and bolts of the economy. We talked about this one yesterday. Woohoo! Look at Fastenal.
Leaders to laggards, laggards to leaders. Give us the numbers, AB.
Yep.
EPS came in at 51 cents, in line with estimates. Sales came in at 1.916 billion, beat the 1.915 billion. They beat the sales by $10 million there. So a very, very slight miss there slight beat there with the EPS coming in line. So, I guess the bar was set a little low here because most of the time when you see those earnings come in essentially in line, it usually doesn't have this big of an effect. But again, those numbers basically came in across the board in line, stock trading up 5% this morning. as you guys say, the nuts and bolts of the economy.
Yeah. And obviously, the reason we say it's that's what they make is nuts and bolts. And you saw the housing stocks yesterday just ripping. And obviously, lower interest rates are excellent for housing. It's also excellent for Fastenal. The housing stocks have held up fairly well. Fastenal has not. Fastenal is down significantly from the highs, and 679 down to $61 is a significant pullback for a stock like Fastenal, which is typically a lower beta stock, giving back basically a year of gains. So you get the pop. Expectations were maybe not that high, and the earnings were fine. Obviously, they liked the CPI number for it yesterday. Popped on that. PPI is going to matter to this one too, so keep that in mind. 5 minutes, the story could change, but as of right now, they're buying laggards, and Fastenal has been a laggard this year.
I'm going to give you a potential sell zone here. Not going to try and pick a top because we're at the highs of the pre-market session, but I'm just going back to late April and early May. Look at all those highs at 68. One of them goes up all the way to 69. So to me, that many times before it broke down, a lot of people getting their money back here. So I'd keep an eye on that 68 handle. Let's just call it, I'd make 68.50 a 3-star. That's another another 50 cents away from here. So that's what I'm looking at. Where to buy this on a dip, I have absolutely no idea. Up $4, but longer term, you can think about a meaningful retracement. This is called a 20-point move. That would take you closer to $70 for Fastenal. And just going back to the theme of lower interest rates and housing and everything, Dennis, did you hop on any Rocket yesterday or UWMC? Those had some nice
Those never
moves
even come
yesterday.
on my screen, Joel.
No, too small.
Pretty small. UWMC especially not. I trade Rocket every once in a while, but yeah, these aren't like the stocks. I'm an S&P mega cap trader. 90% of my trades are probably within the S&P, and probably 80% of them probably in the top 50 companies. Why do I trade those ones? Because I can move big size in and big size out fairly easily, pretty much after hours and pre-market as well. Getting to these rockets and stuff and smaller companies and the spreads are wider. I mean, how are you even trading Rocket in the pre-market? It's 17 cents wide. It's a $14 stock. It's got
Really?
a 1% spread in the pre-market. So, yes, it's trading up, and yes, they're excited about this. This is not a stock that I trade though. So, I mean, small cap traders, they love this kind of stuff. I am not that trader.
Okay. No Rocket, no UWMC for you.
Nope. So 2 minutes. Let's preview the PPI here. I'm going to leave at about 829 just to go prep myself for this number here, but I want to hear AB's numbers here so I know what to look for in this coming PPI number.
Yeah, so PPI is expected to come in at 0.1%. That's against the negative 0.2% that we got in May. Core PPI is expected to be 0.2%. That's against the 0.0% we got in May. And then, wow, I'm not seeing any expectations for core PPI year over year, but previously it was 3.2%. Without the core, just regular old PPI was 2.2% in May. So looks like we're actually expected to see this number perk up a little bit in June compared to the May numbers. And of course, yesterday's CPI numbers came in lighter than expected. So if these come in lighter than expected, we might see some continued follow through in terms of the bullish activity in the IWM. Again, this is the Producers Price Index. So it's looking at input costs for businesses and companies. Could be seen as a potential leading indicator for inflation, as the idea is that if costs fall for companies, that maybe that means costs will fall for consumers. As we know, that doesn't always end up happening, but that's the idea at least.
Okay. All right. Here's the setup. We are just about unchanged. The street undecided going into this number. Pre-market high comes in at 56.46. You all know the way we whooshed down yesterday, that there's not going to be resistance. Miter's stopping point may be about close to the 59.60 area if you're looking to sell into strength. Downside's a little bit more important here. You have a pair of lows from Wednesday and Thursday right at 56.30. That is the level that the Bulls will absolutely be wanting to defend here off that number. We are getting it coming across the wires here in just a matter of seconds. Not much of a reaction. We're lower, folks. We made the initial move is lower. And let's see what the rebound is.
SPY PPI came in at 0.2% versus the 0.1% estimated. So it is hot, and it was prior, again, negative 0.2%. Wow. PPI year over year for June, 2.6% versus 2.3%. So that is hot. Core PPI for June came in at 0.4% versus 0.2% estimated. Hot across the board, Joel. These numbers are coming in. What is the market doing?
Well, they took it with a initial down swoop there, but once again, the buy the dippers came right back in here. We spiked down all the way to 21 and a quarter for some unknown reason, but we're back above that 30 level. The bulls are digging in as we speak here. You did get the initial down
Don't look at
surge, but
SPY.
SPY?
SPY don't matter. Look at TLT IWM.
Okay. TLT on the 1 minute here. TLT spiked down too, but man, it's down 42 cents. The street doesn't seem to bother. It doesn't mean to bother it.
Joel, maybe for some of
Joel, IWM is down $2 from where it was trading pre-market, so
yeah,
it bothers it.
Okay, I
whole-
missed
It's
the
the whole-
SPY
IWM.
blinders and TLT's off 50 cents. We were 214 on this IWM. We are giving back a lot of it, so we're 213 and a half. So it bothers it a bit.
Okay, all right. My bad. Have the S&P blinders on again. How many times do you tell me that?
The thesis with the IWM, I mean, with the idea that inflation's cooling, interest rates coming down, great for small caps. You get a wrench thrown in that thesis this morning with hotter than expected PPI data potentially, scaring off some investors that were buying IWM on the idea that we're for sure getting rate cuts because inflation is for sure slowing down. Now you get some hotter PPI data that conflicts with the CPI data that we got yesterday. There is, if you wanted to put the bullish spin on it, be like, well, I guess the economy is not slowing down as much as, some people were thinking out there. So there's, there's different ways to look at this, but either way, again, we've gotten some mixed inflation data the past couple days. IWM for sure the one. I was going to say, Joel, maybe for some people in the chat that could be newer or whatever, can you explain why we look at the TLT and why that's like a thing that we always
Because that's the indicator of interest rates of what the Fed's going to be doing. Direct, like the 30-year bond is an indication of what the Fed's going to be doing. It's what the Fed funds tool is based on.
But specifically with the price action. So if TLT is moving down, what does that mean? If it's moving up, what does that mean for interest
if it's
rates?
moving down, that means they don't have the expectations for lower interest rates. If it's moving up, that means there's expectations that interest rates are going to be coming down. That's the implications of it. And if you look at the 30-year bond too, same kind of thing. You'll see the same kind of price action.
Got it. And I knew that, for the record. I just saw some people in the chat asking about it, So, all right, why don't we bring on our man Jonathon Corpina a couple minutes early? He joined backstage early today. Hopefully we haven't bored him off too much with our different talks, especially about the horsies up in Saratoga. If Jonathon gives me the signal, thumbs up that he's ready to go, we'll go ahead and give him our special pre-market prep welcome and see what Mr. Corpina has been watching. All right, Jonathon Corpina, we got you on mute right now, FYI. So let's once you're off that,
There we go. Can you hear me?
Yep, we can hear you. How are you doing this morning?
I'm good. Thanks for having me, guys.
Of course. So before we get into today's numbers and price action, I mean, how about yesterday? What were you trading? What were you watching during the wicked rotation from small caps into from big caps into small caps?
Yeah, that was some rotation. To say that we knew that was going to happen is probably true. When that was going to happen, we didn't know, right? So the way the market activity has been, and it's been building up, with the Magnificent Seven really propping this entire market. And every time we keep hitting new highs in the S&P, there's always this underlying headline of, yes, the market's hitting a new high, but there's all these other laggers behind and everything else hasn't really caught up, and we haven't seen that rotation yet. Yesterday seemed to be like that perfect storm. And again, no one knew that was coming then. And especially once it hit, how hard it did really hit. That massive rotation that we saw there yesterday was something rather epic. To see the Russell up 3.5% and S&P down over 1%, a move that we haven't seen since 2008, I believe that is. Pretty significant moves there. But the market has built up to this point where this certainly was going to happen. Talking to customers, again, I think some people were somewhat caught off guard, but when it happens, it's like, okay, this was going to happen at some point. What was going to be that catalyst to get there? Markets have been performing rather well. Economic data, as we saw yesterday versus today, we still get this conflicting data, which adds to the conversation of what is the Fed going to do with this information? How are they going to use it? When are they going to use it? Adds to a lot of uncertainty here. But we've built in so much on the high end in this market. This type of swoop down, this kind of pull out, pull back, I think is healthy for our markets. It again keeps us in shape, right? It keeps us in line of like the markets aren't going to keep going up every single day. There are going to be these ancillary factors that are going to come in and move this market down. So for me, I think this is kind of a healthy wake up call to all of us. I think it puts things back in line a little bit. The risk of the market is certainly on the table here. Put in all the geopolitical factors and the headlines that we watched coming out of DC. But this move yesterday was quite a move, as we've all watched, from the playing field and some of our viewers on the sidelines. It was some day to watch.
What are we looking for a continuation, right? I mean, conflicting numbers here. IWM, everyone been waiting for that. I mean, just on a timing basis, like one day doesn't make a market. I mean, considering the time that the Mag 7 is outperformed, you get one day like you had yesterday. What would you need to see, either technically or fundamentally to say, okay, yeah, this is going to be a sustained trend where people are going to be, because it's already reversed for the most part, right? I mean, look what the IWM today. Well, no, it popped back up here. It's up $2. It's all over the place. So
It is.
they're liking the numbers. No matter, I mean, they're liking it even though there's not great numbers. Correct?
Yeah, from a timing point of view, it's rather interesting, right? So we'll go back 2 weeks. We get through the end of June, end of the month, end of the quarter, end of the half year. You look on your Bloombergs and your IMs. A lot of out of offices come the beginning of July, and it's like, all right, we're gonna have a quiet July, because we've got a lot of things on our calendar moving forward as we come into the fall. And then you get information, you get this data like this, that again, I don't think it caught people off guard. I just think that the reaction was somewhat exacerbated. So what do we need to see from here? If we had this conversation yesterday, the answer would have been, let's see what the economic data is today and let's see how that plays out into the market. And then moving forward, it's what's the Fed going to do in their July meeting with all of this information and the market activity that we're seeing. So I think at this point, I'm still in the camp of the 2 steps forward, 1 step back mentality to this market. We're going to continue to trend higher as we have. We're going to get days or multiple days like yesterday, and we'll see how this plays out today as we've seen all the volatility this morning at post 8:30. We need to see a little bit of a pullback here, right? Maybe form a very short-term base and then bounce back up again. I think that's the trend that is the trend that we've seen along, and I think that's the trend that we're going to see again. But the volatility in this market it has been so widespread that sometimes when these things happen, like yesterday and now today, we might see just a lack of participation in the market. It's due to the month, right? July, and people are on vacation and people kind of sign off at this point. And B, with this type of economic data and the conflicting data, we're going to start to see some people just not participate as much. That doesn't mean selling off of positions. It just means let's sit on the sidelines, let's watch and see how this plays out, because there's so many factors that are there. So for me now, getting through today obviously was a getting this data, I think, was a key point. We'll continue to get our normal economic calendar next week. Earnings season is here. Earnings season historically helps the market overall, but when you look at this type of earnings season, it's going to be more of not really the top line and the bottom line. It's going to be the earnings. What they're going to talk about. They're going to talk about supply chain issues. They're going to talk about labor issues. They're going to talk about interest rates. They're going to talk about AI. All these different things we're going to need to wait and hear. So I think at this point, we need to get through some more economic data. We need to get through a little bit of the earnings season from some of the big boys to see what the forward outlook is. That June Fed meeting, you talk to some, cuts on the table, cuts off the table. As you guys were talking earlier, the September meeting seems to be the real key focus meeting. So that kind of gets us between now and September as far as what catalyst could be.
Yeah, just the timing of the September cut, with the election coming up makes a lot of people skeptical about it being for political purposes. But before we get more on the interest rate front here, what about the start to Q2 earnings season here? Delta yesterday, Delta, who always sets a really high bar for itself, last quarter comes under that high bar. It doesn't have that good of a day. You're looking kind of a mixed here in the bank earnings. Wells Fargo trading down substantially, Citigroup up substantially, Fastenal, the nuts and bolts of the economy, that's trading up. Kind of a mixed start here to Q2 earnings season.
Yeah, and I think that's what we're going to get, and that's what we should get, right? The uncertainty of what's in front of us is a reality. When we talk about what the Fed is going to do, that uncertainty has been there, and it's going to continue to be there until we get some more clarity from them. The geopolitical risks that are out there are going to continue. Our own election cycle impact is going to be there, and that's going to continue. So I think we are going to get somewhat of a mixed bag, and appropriately so. I don't think we're going to get a real gung ho speeches from CEOs and CFOs that everything is rosy and the outlook is rosy, because we're all kind of fighting in this same trench of what's in front of us. You had Jamie Dimon talking. You made a comment today that M&A activity should really pick up as we continue throughout this year here. But from the regulatory element side of it, that's going to be somewhat of a headwind that gets in front of that there. So we're going to hear this hedging comments coming out of these earning calls, and I think it's right. It's rightfully so. No one can really pinpoint what the Fed is going to do and when they're going to do it. Yes, economic data is kind of showing us where this might go, but you never know what the Fed's going to do. We continue to watch what's coming out of Washington, and that, not that the election has a overall impact on individual companies. I just think from a economic point of view, the outcome of this election is going to be very interesting. In the position that we're in right now, where you have an incumbent president who is struggling in the polls, and the other ancillary issues that are coming along with that, I think that's just going to force a lot of lack of participation into our markets here. So for second quarter earnings, they should be decent. They should be tepid, but I don't think we're going to get real positive outlook, forward-looking comments coming out of the C-suite offices. And again, rightfully so. The headwinds that are in front of us are real, and they're going to have to navigate these very, very gingerly.
So what sectors would you be looking towards here? It seems like we're kind of in a stalemate here with on the rate situation. Something I've talked about, like, why do rates necessarily? I mean, well, they pretty much established that they're not going up. Why not? Why do they substantially have to, go down? where do you go if it just rates are muddled in this area 6 months from now? New change, perhaps a change in administration, interest rates are still where they're at.
Right.
Where do you go?
Yeah, so I think in this interest rate environment that we are in, we're not going to see the pendulum swing back as fast as everybody wants, right? If you look at how long it took us to get to this point, it's not going to swing back. So we are going to remain in this interest rate debate and move for quite some time. It's going to take us a long time to get back to somewhere where I think people feel comfortable. So that being said, I think financials have been relatively been doing well throughout this timing, and I think as we continue that this is going to take a longer period of time than people would like. I think financials certainly remain in play. When you look at the tech sector, it's hit or miss, right? I mean, you're either going to be really right or really wrong. And when the swing is when it's swinging up, you want to be on that board. You're not going to be able to pick the timing right of when that rotation occurs, as we noticed yesterday. But I think overall, again, that 2 steps forward, 1 step back. If you're in that tech sector, I think overall you're going to do well. I do think people are becoming a little bit more comfortable with real estate interest rates, mortgage rates of where they're at. We've seen some activity continue to pick up in that sector there. Again, as it's going to take quite some time for interest rates to come down, people do need to buy houses. People will want to sell houses. That transactions are going to continue to occur. You find that in this, 6 to 7% range at this point, where people do feel comfortable, even if rates come down, we're not going to see an initial pickup in that area. But I think as we get a couple of cuts, we'll start to see that area certainly start to pick up. Home builders have had a lot of struggles within themselves. People are watching what they're doing on home improvements, and home builders are being very careful about what they're
Uh-huh.
doing moving forward. So we're gonna have to continue to watch that. And the last sector I just think we need to keep an eye on is the travel and leisure. I think people are really watching where they're spending money, where their discretionary spending is coming. Are they overspending? Are they splurging on those vacations? They're thinking twice about that. Yes, we've seen airline tickets pricing come in due to fluctuations in oil prices. But I think travel and leisure is one that we're going to have to keep an eye on as discretionary spending continues to be tight.
And I know I took a look at the cruise lines. It seems like everyone's going on cruises here instead of flying because RCL was hardly affected by the move yesterday. Carnival Cruise Lines, didn't have a bad day yesterday. That's developing some really good resistance here in the upper 18 handle. We'll see how that does with that today. But just going back to the AI trade and the great debate with that. It's like is a lot already been priced into the market? Like, how many times can Nvidia keep coming up, with these numbers and projecting even better earnings? So, you've been around for a while. You've seen the market. You saw, internet, bubble. Things are a lot different now because these companies are showing that they can make money and that they, are increasing earnings. So, just talk about the pull forward in the AI.
Yeah, I think we're going to continue to see that, right? That technology has advanced and will continue to advance rather quickly. I think there are some businesses that are out there that have been somewhat reluctant to get to incorporate AI into their business models. I think at this point, if they haven't already, they're seriously considering stepping onto that field in the AI world and bringing in AI to help enhance their product in some way, whether that's from a client facing point of view or from an internal processes point of view. I think that's trade is going to continue to be there. It's going to get hot and cold, meaning that we're going to have those cycles where anytime AI is mentioned in a headline, the market's going to pop off of it. We're going to get somewhat immune to that after a little bit. But as the technology advances and as the processes of AI enhance internal processes and enhance client and customer interactions, I think we're going to continue to see that pop continue. So it's going to be a little bit of a lull. I think NVIDIA is going to certainly continue to be the leader in that space there. We're going to continue to see different partnerships with some of the mega names in that sector there. That'll help some of the others in the world to help them enhance their products. But I think that AI trade is the hot one for now. It's going to continue. It's not going to be as hot and heavy every single day as we might have seen over the past couple of quarters. But I do think we're going to continue to see that trade help and pull everything up. We're just going to need We're going to need the IWM and all the components of that to make sure that they can keep in track with that, because when you have such a big gap in our markets here of talking about S&P and Nasdaq's hitting and other indices hitting highs, when you have the Russell lagging way behind, we're gonna have to find ways to bring that one up.
All right, Todd, just moving along. I just wanted to just real quickly touch on the energy sector. I mean, you've had some really nice moves in crude oil back up to $84 a couple times, which is the highest it's been in quite some time. And, your Exxon Mobil's, your energy stocks, your value stocks, are, just kind of near their June lows here. Is there a little bit of a catch-up trade with some of the big oil stocks, Exxon Mobil, Chevron?
I think so. I think as we might continue to see a lot of volatility in our markets here, I think you might see some of that energy dividend play come into effect. Always seems to be somewhat of a safer haven in some times where you see some part of the rotation. But unfortunately, when you have such other higher flying sectors that people are seeing great returns in, I don't think you see a full rotation that comes into energy. I think some of it also is going to continue to peel out and go into the financials. It's going to go into tech. So energy certainly has been lacking behind. The fluctuation in oil prices clearly has an impact on that. Some of the larger names there do pay very good dividends. I just don't think people are going to really rush to that and focus on that just yet.
And then Jonathan, right now, I mean, we've had a lot of people calling for big pullbacks and the big boys. At what point do you think it'd be safe to kind of come in and maybe buy the dip on something like Tesla or an Apple or an NVIDIA if they continue to move lower?
They've built the moves that we've seen in those three stocks have been tremendous. I mean, look at Apple, right? It was stuck in that 160 to 180 range for quite some time, and then blew out from there to where we're seeing it now. We've seen the same thing in Tesla. You guys were talking about it earlier. We've seen that in NVIDIA. I think you're going to have to see not a big pullback in those, but you're going to have to see somewhere from a 5 to 10 12% pullback to feel comfortable enough to get into that. Those companies clearly have strongholds on market share, and it's going to take a lot for them to really move back to a point where you really think you're getting it at a discount. So I think if we start to see any significant pullback in those stocks, that's where you're going to get in. But the volatility in those stocks, we'll kind of keep Apple aside because it's been kind of stuck in that range right now. But we're gonna see NVIDIA to swing back and forth. Tesla has performed well, but we definitely have seen volatility there. I don't think you're going to get back to Apple at sub 200 anytime soon. But I think if it dips that back down into the 205 range, that's where you start to pick away.
Okay, Jonathon Corpina from Meridian Equity Partners joining us here on PreMarket Prep, breaking down the PPI numbers in the sectors. Thank you very much, Jonathon. We'll talk to you again soon.
Great. Have a nice weekend. Thank you.
You as well, Jonathan. All right, guys, we've got a few minutes left here, about 7 minutes. We haven't talked the hack news yet. So, as technology progresses, we're seeing, more and more hacks. We're seeing more and more cybersecurity companies, and it feels like the hackers are kind of winning the war right now because I hear a lot more about, hacks than I do. I guess you're always going to hear about the hacks in the news, but either way, AT&T, a hack that, impacted a lot of customers, not only customer data, but phone calls and texts as well. And I believe they said Snowflake was, Joel, did you say Snowflake was involved in this as well?
I thought Dennis did.
Yeah, Snowflake. All right, let's see. So
yeah,
Snowflake
is down on it. I think they're obviously behind the scenes on that, so they're getting hit. They're down $4 here. You wonder on a stock like Snowflake that has been a laggard, got a little pop yesterday, but then even that laggard tech really didn't get some love. It's down here. I mean, in the 130 area, you wonder if it doesn't find some support down here, Joel, if they don't come in and actually buy the dip on a stock like
Yeah,
Snowflake.
I mean, you look at this one. Really, it's coming in substantially below halfway of the move. Kind of open between 130 and 140, but it was much lower. So it was under 131. So the longer they defend that pre-market low here, and you don't get a shot to buy it there, I agree with Dennis on this one. A little bit of a bounce. I mean, you see these hacks and there's the initial reaction. AT&T, I did see it much lower on the day, so I'd be more inclined to try and buy the dip on this off the news and sell it in the hole for Snowflake.
I did restart my computer, so we'll
Okay.
see if it's a PC issue. So let me know if I, click out here, then we can start thinking about the headset. But
I saw
I've
you
got
gone.
nothing
Okay.
running on this computer except StreamYard. So I literally just cleaned it out. Nothing running except StreamYard. So let me know if I sound better here, because some people are thinking it's a PC issue. So I'm giving it very little jobs to do this. Intel processor, and I'm done with Intel processors after this, folks. I really am. Never buying an Intel processor again because they are junk. But let me know if this helped. So let's go back and just talk about what just happened in the last 25 minutes. So what you clearly saw was a sell-off in the TLT, a clear sell-off in the IWM, and the buy the dip just reemerges. TLT right back up to where it was. IWM right back up to where it was. And the IWM, it was violent. The S&P is a muted response, which is why I said don't look at it on the numbers, because it's so bloody diversified. You got the value stuff holding it up, so you're not going to see as much action. We clearly see the action in the IWM. So bring that IWM chart back up. Maybe zoom in a little bit more because it's so interesting. Loses $2, basically gives back 2/3 of the day's gains. And then within the 20 minutes, it's right back up near the highs. So what does this mean? It means that this trade wants to continue. It means, and not saying, that, obviously today's high is going to be a point here because it's where it was right before, the 830 number came out. But the number was a bit hot, was it not? Like a little bit hot?
Well, yeah,
Because I was trading
hot
so
across
much, I
the
wasn't even
board.
paying attention to the number. So it was hot.
Yep.
So the initial response, the algorithmic response, you would think would be correct. It was hot, but the buy the dip mentality is here. And maybe this is going to be more than a one-day thing. If they can hold it up on a hot number, it'd be a really good sign. So obviously, it's not 9:30. Market's not open. Most institutions aren't even trading in the pre-market here. So we have to wait before passing judgment here. But so far, so good for the small caps. Things might change after 9:30. But it's very good that they responded and didn't give everything back on a hot PPI. And again, they're going to give more weight to the CPI, but the PPI being a little bit hot, you'd think would spook some people out of the trade. It did initially. Those people come right back into the trade.
That's a 1-minute bar, Dennis.
It's wild.
Yeah. Yep.
Wild bar.
Yep.
So,
Yep.
I mean, that was a wild move down to 210.5. So we basically 210.5. The IWM gave back pretty much the entire game. I did not see it go flat, but that bar there that you're looking, maybe that's a bad tick.
Yeah.
That's got to be a bad tick. The 845.
You know what? I bet you that is.
That one's bad.
This is the not. Yeah, I bet you.
Yeah, ignore that one. It was probably the stupid 8 o'clock Prince or whatever it is.
There.
Yeah, right there.
Yeah.
Ignore that big green bar that's like
I
at
wonder
847.
I wonder that's from. But yeah, this was on the number, and then you got the rebound. I mean, you're right back up. You're at the highs of the pre-market session with way above yesterday's high. Yesterday's high you can use as support now at 211.23. What else did you see moving here? I see Wells Fargo, the banks, they already had their earnings. They're not as factoring much.
I see tech bouncing a bit here too.
Yep.
So a little bit of life in tech. It was Microsoft was red this morning. Meta's getting beat up today. I don't know if Meta or not. Musk said something against social media companies. I don't know if we got Musk. I don't know if there's some analyst commentary here It's got to be something else on Meta here, though, because Meta's down significantly. If you know in the chat, let me know. I did see that Musk had some commentary on social media companies, so maybe that hit Meta. But Tesla, which we haven't talked too much, but we talked off the bat, is trying to bounce a little bit. It's trying to hold up a little bit. Still down $4. Got downgraded by UBS here today. Again, not a good headline, so I wouldn't be surprised, that people are looking to take profits. They don't want to sit around. There's a lot of traders in there that were buying ahead of the robotaxi event. Robotaxi event kicked down the road. They're probably going to sell. So it's not surprising. Not at all surprised with the sell-off and the reaction here. It may continue. I think in the short term, it doesn't bode well for Tesla, but I think in the long term, story is still intact. I think there's going to be buyers when you get down that 220 area. I think there's going to be people who are still, are starting to become believers in the story. I'm one of them.
Yeah, you did have some battling analysts in Tesla because you did have Dan Ives at Wedbush upgrade the stock with a $300 price target. So seeing those analyst ratings coming in, we did also have some battling analysts in Spotify this week as well, which has been trading down about 5%. So, but that brings us to 9 a.m. It's been good this week to get back into the full swing of things. Of course, last week was kind of the weird week with the 4th of July. Market closed on Thursday.
Yeah.
Now we had our first full week. Felt like kind of a long week after coming from the longer weekend. But either way, thank you to everyone who tuned in to Pre-Market Prep with us today and throughout the week. Thank you to our guests. Joel, who do we have joining us on Monday?
Dave Lauer. Dave Lauer is
Oh,
going
nice.
to be joining. Yeah. And we haven't had Dave on in a while. And I figured
I've been going on Dave's podcast, though. He does it once a month. He talks markets, and I've been going on with Dave. I've been friends with Dave. We've been friends with Dave 14, 15 years here now. So we've known Dave a very long time. Market structure expert. I'm of all the same opinions on him on market structure. We love Dave Lauer.
Beautiful. Again, guys, thank you to everyone who tuned in. Please smash the like if you haven't already. We do have live trading starting up right after this. They will walk you through the open on there if you want to keep hanging out with us here on Benzinga's channel. And we'll see you guys on Monday.